What is up, guys? Welcome back to the channel. Welcome back for another Bitcoin analysis after a week of turbulence and a lot of questions being asked about why are we not pumping if the Fed decided to cut the rates. That's what everyone has been expecting, that December 10th is the absolute go signal for the market to go on a huge bull run. Now we're going to get into all the data that still stands in the way of that happening, and I'm going to explain you exactly why it's not the case, right? I already mentioned it in the beginning of the stream when we covered the live event of the Fed announcement about the rate cuts. And yeah, guys, there's a lot to look at today. So let me just set up some stuff here quickly and then we get started. Hope you guys all had an awesome week. For me, it was quite busy, and I'm still trying to figure out how to be more, stream more, really, to be more consistent with my streams, to do it on a daily basis. There's a lot of stuff going on in my life right now that stands in the way of that, but this is still the end goal here in the next few weeks and months to really get the ball rolling and to start streaming on a daily basis here. Okay, guys, enough talking, and warm welcome to you guys, by the way. If you're new to the channel, especially here, and you enjoy the analysis and you find some value in it, consider joining us here in Team Crypto Unhyped by hitting the subscribe button and all that good stuff down there. Now, guys, enough yapping, enough talking. Let's get into the action here. And I'm going to start things off with the data, actually. And we're going to go straight into... Wait, actually, we need to set something up here quickly. Just a second, guys. A little bit of a confusion here on my part. Here we have it. So this is something that we looked at last time on the stream already. And I told you guys, like, this is now the expectations for the next rate decision in January, which is at the end of January. So a lot of time between now and then, almost 2 months for the Fed to collect data again. And speaking about collecting data, that's exactly what the Fed could not do for the last rate decision, as we're missing the entire set of data for October and November, basically. So they were flying blind into this event with a lot of pressure on them to cut rates, as when the government shutdown started in September, the economy looked to be in a place where it's favorable for rate cuts. After that, all the data has been erased and basically forced the Fed to make a decision based on September data and some really thin data from October and November, and events that really don't carry that much weight, usually economic events, became way more important. So guys, this is what happened. We saw that the rate cuts towards the 10th of December, when we saw the rate decision off and the rates were cut by 25 basis points, odds for the rate cuts were at 97% on that day, or even 98%. At some point a couple of weeks before, when we got all that negativity going, they dropped down to somewhere in the 20% range, if I'm not mistaken. But that recovered really fast after Bitcoin bottomed out and reclaimed 92,000 and all that. Then we saw it in the price action. Then, of course, the economic data came out, rolling out the 2, 5, and 70 year bond papers came out and were picked up at lower rates. And then we had some positive data overall from the GDP and so on. So that kind of put the ball back in the court for the Fed to decide that to cut the rates, with a lot of pressure coming from the president and the administration. And therefore, we saw the rate cuts. Now, we heard the tone during the event. That's why I told you guys, we cannot expect to see a massive price bounce after the announcement of the rate cuts, because it's already priced in. And when it's priced in with so much certainty as 98%, then you have a classic buy the rumors, sell the news type of event. And then it's more likely that the price continues in the range that it has been in. And lately, we have seen big price jumps on weekends and so on. And I spoke about it in the past. That has a lot to do with daily close rebalancing. That's what funds such as ETFs and investment funds, pension funds and stuff that include Bitcoin do, because, of course, they need to make sure that the price, the returns on that weekly close, on that daily close, is exactly the same as the Bitcoin price. And the returns need to line up 1-to-1 with it. Otherwise, investors can sue. And that's why we see a lot of volatility on Sundays. And we expect that again. And I'm going to get into that on Sunday in detail. But yeah, guys, this is the main thing. We have priced in that rate cut, and therefore nothing crazy happened afterwards. If now Jerome Powell would have taken the stage and told us that he's extremely dovish and had a very dovish tone going into the next rate decision in January, and would have told us that the probability is that the rate will continue to be cut and that they're injecting massive amounts of money into the economy, then of course that would have been very favorable for us, and we would have seen a much larger price jump right after the event. As we know, for ECB rate decisions and FOMC rate decisions, usually it's the case that, or almost always it's the case that the tone of the speaker after the rate decision, in this case Jerome Powell, is way more important for the price needle to move for Bitcoin and risk assets than the actual outcome, as that is by Polymarket often predicted very precisely and therefore priced in. And that's why we did not see a big price jump after the announcement. Now let's look at some more events here that we had this week that have actually moved the price needle for us, and that really gave the Fed some more information here for their next rate decision. So, for example, we spoke about the 2, 5, and 7-year bond auctions that we had that were picked up at lower rates than previously. That's, of course, a very positive sign, a bullish sign, meaning that investors are buying up the debt of the US at a lower interest rate than previously, giving us indication that the investors are expecting better monetary policies in the future. That was not the case here for the 10-year and 30-year bond auctions. They actually been picked up at higher rates than previously, and that of course a more bearish sign for the economy, that investors in these cases are expecting worse economic outlook and conditions overall. So very, very interesting to see that. And then we see now that also the GDP in the UK GDP month-on-month data came out more bearish than expected, in line with the previous, but not with the forecast. And then the German CPI perfectly in line with what we've seen in the last month as well. So guys, the data basically coming out exactly as expected here. We saw the big main event, of course, was the rate decision. And last night, US President Trump took the stage for his speech. That is the one guy that can always compete with Mr. Fed Chairman Jerome Powell to move the price needle with just a few words. And that's exactly what happened. So we saw a nice pump yesterday, but we came to a massive resistance level. And now everyone's asking, why is that such a strong resistance? Why can't we break that $93,000 level? Why are we stuck there? And that becomes very clear if we look at all this data here. For example, we get to the liquidation levels on Sunday. It's not so important. This is one key thing that I want you guys to look at. So this is the spot action basically. When you see the red blocks, that means spot selling pressure is stronger. When it's white, it's very neutral. There's a balance between buying pressure and selling pressure. And when it's green, obviously, the buying pressure is increasing. Now we're seeing here the massive red block that we just came out of here. Basically, the selling pressure has been outperforming the buying pressure, and therefore the price has been going down. Spot action has not been picking up, and investors have not been buying Bitcoin to hold here basically since late summer, right? July, August. We've seen that, of course. We will see it in the volume in the charts in a second as well. The last all-time high that we saw was based on really, really low volume. And then after that, of course, a huge sell-off here on spot action, meaning long-term investors selling their Bitcoin. And then now it neutralized here. You can see that it's starting to move up. So here you see, for example, it's red. But what's important is here that we're coming here. This is November 2022. We're coming out of a bear market. The buying pressure is still overwhelming, but the actual price is moving up, which means the next step is that it neutralizes, and then bulls have the chance to take over. This is exactly what we're looking for here again. Here we saw that then we came into a bull market, of course, and then we see it always went from green to neutral to green again, meaning the buying pressure and the holding is overwhelming the selling pressure, and that continued then here. And then if you look at the of course at the price and the dates at the same time, then you can see that always lines up perfectly with those dips that we had in the bull market. Same thing again here. We came out of selling pressure, it neutralized, and then the price went up here on thin volume again. You see that's no overwhelming buying pressure here back in December 2024 when we saw our first top there above $100,000, followed by another top in January, and then followed by selling pressure again. So this is the same pattern that you can always follow here. This is something that you can look at yourself here. Just go over to Crypto Quant and look for the spot taker CVD cumulative volume. And then you see here right now, after the massive sell-off now, we're neutralized again, and we're seeing the first green buying pressure bar here again. So very interesting. It's flipping over now. And what we want to see is the price to increase while spot buying pressure is increasing as well, and that will then drift over into open interest. Of course, open interest picks up once spot gives us a strong fundament, a strong support level. And I'll get into the charts in a second, but just look at this, for example. And then we see here, this is now Bitcoin futures open interest. So these are all leveraged positions here since October. You see the top here, October 7th, and there you see that it was a total of $94.12 billion here of open interest in the market at the highest point in October, and you see how flat that is now. So there's no leverage in the market. Smart money is not opening huge leverage positions if there's no clear breakout. Smart money enters the market when the market is clearly moving into one direction. Now we're ranging. We're at the bottom of a downtrend right now across the board, but we're ranging sideways, and we're stuck between $80,000 and $83,000 and $90,000 to $93,000. When we get a clear move into either direction, when those boundaries are broken, then we can expect open interest to pick up again, smart money enter the market again, because I will show you exactly in the charts in a second why that is. So you can see it here, really open interest flat. Then we saw it here, spot action with huge sell pressure neutralized. Now buy pressure is picking up again, very thin, but nonetheless we see spot action. Investors are buying to hold Bitcoin at the current levels. So of course what we want to see now is that key level to be broken. And now you see a little bit the dynamics between spot and ETFs. And ETF and open interest, ETFs, of course, we can get into as well here. We see that we had the first strong week again here. We saw a comeback here. Bitcoin now, the weekly total net inflows were $237 million after we've seen here basically completely flat for the last 2 weeks. And before that, we had 4 straight weeks of just outflows. So this is something that we got to keep our eyes on as well. If that starts increasing now, that ETF inflows start increasing, that of course is a strong sign. If it aligns as well then with spot action increasing, then we can expect open interest to pick up again. Open interest, of course, can go into either direction as well. We can see huge leverage positions opening to short the market as well. But there's the same thing. We need certain levels to be broken first. So let's get into those levels here. And for that, let's get into the charts right now. Same thing here again. Guys, I've been slacking with setting up these streams. I have so much going on that it's been quite a challenge here to keep up with everything, but I'm trying my best. All right, guys. So what we got to see here now, of course, this is the weekly chart. We get back to that on Sunday, actually. Gonna stream on Sunday the next time for the weekly close. And then I will also get back into daily close rebalancing and explain you exactly why we see those big volatility spikes and such strong and fast recoveries after then on Sundays. I made a video about it the other day. It was in another stream. I'll make sure to make a clip out of it so you guys can watch it again. So yeah, guys, this is the main thing here that we need to break right now. So you can see that basically all this here is if you look at the trend line, right? If we look at it on the daily chart, we can see that we printed here a couple of higher lows right now, but it's very, very flat, the trend line. And whenever we look at, this is how we can identify basically the volume without looking at the volume. If a trend line is very flat, it means there's no real commitment behind it. that there's no real direction of the trend and we're mostly ranging. We're printing these higher lows here, but in a very fragile state. If a trend line is too steep, then it's unsustainable and then it's likely to break down very fast. What we want is a really solid trend, like for example the bull market trend here, where we see not a very steep trend line, a very solid trend line with peaks and valleys in the price action, giving us very, very strong trend and a very healthy trend. We don't have that yet, but we have a very clear resistance level here, right? We're coming out of this downtrend, and by definition, to flip bullish out of a downtrend, what we want to do always is break the last prior lower high in the downtrend, start closing above it and turn it into support. And there you can see it here in that downtrend here. Of course, we're in a trend within a trend. That's always the case when we look at smaller time frames and then look at the larger time frames afterwards. Then we have this massive downtrend here. But we'll look at that on the daily chart because there's the same thing. We need to flip bullish first on the 4-hourly, then on the daily, and there we will see exactly what the levels there are. But here you can see this is a perfect setup right now for a breakout. Why is it perfect? First of all, in a price action perspective, what we want to do to flip bullish here, once again, we want to reclaim the last lower high in that trend, and that's exactly where we're failing here, right at that area. So what we want to do is close above it and then confirm above it, either with a retest that then gets followed up by another bullish candle to confirm the prior resistance now as support, or we want to break out and follow up immediately with a bullish candle and get above there to give us a clear indication that we're continuing with higher highs here and to also confirm the last higher low. So there you can see it lines up perfectly here with the 200 EMA. So by definition, what we want to do is get above the prior lower high when we're coming out of a downtrend. And when an asset is trading above the 200 moving average, by definition, it's bullish as well. So keep that in mind. If we break above here now, we have those two indicators. That one dynamic indicator here, the moving average, the 200, lining up perfect with that level. So we want to get it close above here and also then break out of this here rising wedge pattern, which in itself is a bearish pattern. As you can see, you can interpret it here as a bear flag almost. But then also at the same time, we're starting to creep out of the downtrend on the larger time frames now. So that is a really key level here, right at $94,000. There we can see the last prior high here on a closing basis in perfect alignment with the 200 EMA. So strong level here, and then to get completely out of it, we need to get back above a $95,000. And then it becomes even clearer here on the daily chart. And here we see why, right? You can see we're trading right around the 21 EMA here and above the 38.2 where we're retracing this downtrend here. This is very important because that's the pivot point on this chart. Same thing as we saw on the 4-hourly chart where it's right in the $93,000 to $94,000 range where we want to get above the last lower high in that downtrend. Here we can see it exactly at $106,000, almost on the cent, right? So this is the point we want to get above, but first we want to reclaim prior support here. Want to reclaim also the 50 EMA here, and there's a key level here right at $100 to $101,000. So that's expect very strong resistance in that area if we get up there, right? And then if we can reclaim prior support, which is now strong resistance, then we have the same thing here that we've been talking about here previously on the 4-hourly chart, right? Where we see that we printed these last lower highs in the downtrend. That is a very strong support level here from where we tried to bounce and reverse previously. So prior support turned into resistance. That was the first spot here where we got rejected, started moving sideways, and then tried to confirm it as support multiple times here. Here once again, now again. So that is basically the range that we're stuck between in here. 89,000 to the downside and then 93 to 94,000 to the upside. Once we start seeing closes here now below 89,000, then of course we need to keep an eye on that we continue printing higher lows on the larger time frames. And that you can see then here, very important that we maintain this trend line here. And then to confirm that high low, of course, we need to break the prior high here. And for that, we need to then break above all that good stuff. And that's where it gets really tight then in the $101,000 range. That is basically the same range that we saw on the 4-hourly chart. Of course, a different price level, but a similar scenario and on a larger scale. And then here see that we saw at 89,000 on the 4-hourly chart, right? Reclaim that. Once we can reclaim that, then we have a solid support, and then we can expect really at that point already open interest to pick up, spot action to pick up, as we then have our first flip where we flip bullish out of a downtrend on the 4-hourly chart officially. And then if we can get back above 106,000, that is then of course the absolute most bullish scenario here for Bitcoin, and the probability then of course that we continuing up towards new all-time highs, especially if we can then close above there here in that area of $106,000. That would put us above the 50-week SMA. We would reclaim then prior support here the same way we did on the daily chart then, and on the 4-hourly chart here on the weekly chart, and that would put us then in a spot where we did something. If we then can of course follow up with another bullish candle, same spiel again, guys. We just need to flip bullish there, then again need to reclaim that as support by following up with another bullish candle on confirming a retest, and then we look very strong here, and then it's probable that we continue up here once again towards the 8-year resistance. Guys, a lot of people are saying, yeah, okay, we are not done here in this bull market, and that we are going to see much higher price targets for Bitcoin and so on. But you guys know my bias here since early summer really is that we're gonna see our top somewhere in the $130,000 to $135,000 range, right? And that's just because we are here. Just look at the perfect rejections here at that 8-year resistance. I mean, we're connecting the tops from 2017, 2021, and now here 3 rejections on the dollar basically here in a row. And to break that here, to then continue upwards, for example, in this trend here where we're connecting the tops in our current bull market, is very, very improbable right now. So very likely that if we get up there that we find another rejection, but that is then likely in alignment also with alt season. Guys, you've been waiting for it. I've been waiting for it. We've all been waiting for it. It's the time of the cycle that is of course the money maker for everyone. And there's a chart that we looked at in the last stream already, and here I'll just open it up for you guys. Let's just give me a second to set it up here properly. And here's a level, right? You can see this price area right here in the 6 to 4% range. You see we went there a bunch of times here. Now for the 4th time actually we reached that level. And then you look at here, it becomes much clearer if we actually pull up the Bitcoin chart here at the bottom. You can see when we reached that level here the last time, we had a massive bounce from there, went on a mini alt season here in 2019. Obviously, Bitcoin did not print new all-time highs then. The cycle here, or that bull run, got cut short, but nonetheless, nice strong pump here from altcoins while Bitcoin has been moving down again. And then you see the next time we met it here is in September 2019. Of course, historical start of another massive bull run here, where that led us to our 2021 tops. And yeah, you can see that of course here had a brief dip back in February, March 2020, or when was it here? 2021, sorry. That moved up here. Then we saw massive rally up here from that area once again, and then came down here again, printed another massive rally, and then famously, we had a double top formation of the 65 and 69K top here, where the price then broke down from, and Bitcoin went down. Altcoins continued to rally up here a couple of months after Bitcoin printed its all-time high, and now once again we're at that level. So historically, 100% hit rate on this. That from here we're going on a massive bull run. So guys, this is a good spot to be in right now. And of course, if Bitcoin is at the level where it's likely to top out, we can see a very similar scenario here, that if Bitcoin goes even on a relief rally, that rally then extends massively for altcoins. And what do we need for that? Of course, favorable conditions for retail investors to enter the market. We've seen in the past, I've spoke about it a lot here on the channel as well, that we need favorable conditions for retail investors. Yes, guys, we need to see lower interest rates for people to start investing in risk assets. We, of course, also now had the official statement about the start of quantitative easing, something that I've first started talking about here on the channel in August or in September, when I told you guys that we are actually going against the trend. This is something that Bitcoin usually doesn't do. Bitcoin is a liquidity sponge, meaning when the printers are in the US and all that helicopter money is just being spat out by those printers, that is being absorbed by an asset, a high risk asset like Bitcoin, very much. And therefore, usually when printers are on, we see Bitcoin going on massive bull runs. This time around, we've seen Bitcoin go on a massive bull run while the printers were shut off. We were in quantitative tightening until December 1st, actually. So in theory, now quantitative easing is starting. Bitcoin should start rallying. Risk assets should start rallying again. And therefore, we are in a very, very strange scenario. And that's, of course, caused by something that we spoke about a lot here on the channel as well. Historically, quantitative easing is the big catalyst for Bitcoin bull markets. And this time around, the big difference is that we have not been rallying due to retail investors investing in Bitcoin and in crypto. We've been driven fully by institutional investors and governments, right? And that also explains the trend, why it looks so different. If you look at the bull market trend for Bitcoin right now, let me just go back to the chart here, to the Bitcoin chart. Let's go to the monthly chart and just look at prior bull markets, right? You can see here this, for example, 2021, just a straight line up, a huge dip, a double top formation and over. And if you look at just this trend here, we spoke about trend lines before. If a trend is too steep, it's just unsustainable. You can't form a trend line if it's too steep with many touch points. It usually breaks down after 2 or 3 touch points here. Here we have a very nice sustainable trend where the price has been recovering, pulling back and then recovering very nicely from it, always printing higher lows and higher highs here, giving us a very, very sustainable trend. And that is the first time we've seen this for Bitcoin. Usually we've seen these massive bull market trends that ended up in blow off tops and just broke down massively afterwards for 1 year. So it's about time that things change, right? This is a maturing asset, it's a very young asset, and the dynamics in the market will just change, specifically with institutional investors and government investing in an asset and starting to look at it as digital gold, something that we've been, as retail investors and Bitcoin fanatics that have been in the game for almost, I've been in it now for almost a decade. Next year it's a decade that I've been in crypto. We've been believing in it all along, right? And we look at the vision of Satoshi, for example, and say, okay, this was created right after the biggest market crash in the modern history back in 2007, 2008. We remember those images of the workers of Lehman Brothers moving out of their headquarters and their offices with their boxes, banks going broke and so on. And we needed an alternative to invest in outside of governments, right? And outside of the central banking system. And that's what Bitcoin and the crypto market really has been created for. And it has been in our hands for a very long time, in the hands of retail investors. And now the big dogs have entered the game, and therefore the dynamics have changed as well. And therefore it remains to be seen if stuff like we've seen so far, that the 4-year cycles remain intact, right? For now it is. We expected that by the 4-year cycle routines, let's call it that, we would have expected the top to be in October. So far the top is in October, and so far we also got the confirmation that we are going to a bear market by closing below the 50-week SMA, which of course has a 100% hit rate, right? We see it here. There we have it. This is the broken trend here, and the where we broke down from the 50-week SMA. And historically we do that, then we come back up to it to test it from the underside, and that's then the relief rally, and then it's over, and then we're going down to a bear market lows near the 78.6 on the Fibonacci retracement, usually for the entire bull market, and also in the neighborhood of the 200 moving average, the 200-week moving average. So historically, this is it. Bull market is over, but nothing lasts forever, guys. Even an indicator that has been so precise and has confirmed the bear markets and bull markets with such precision for Bitcoin historically, and eventually, especially for such a young asset, there will be outlier events. There will be events that take that hit rate away, and it won't be 100% anymore. And there will be a time where we fall below the 50-week SMA, and then without having to go all the way down to the 200 moving average, we will get a bounce and reclaim it and continue to print a new all-time high. So we've seen that happen before in indexes that went absolutely crazy, like for example the S&P 500. Of course, there's also, when in its early days, there's also been a 100% hit rate on certain indicators that it always confirmed bulls and bear markets. But things have changed as well from that perspective, and therefore still very interesting here. Still expecting to get the bounce, the relief rally that we're all waiting for here from the current level. This is the strongest support that we find in the chart. But then also there's some very strong data here that shows us that we could actually still go lower here. So if we go back to the BTC USD chart, I drew it up here. You can see the last two cycles. Let me actually go logarithmic here so it becomes easier for you guys to see. There you see, for example, the last time we printed the cycle top here, the 69K top, before we saw our relief rally towards the 50-week SMA, we dropped 52%. In 2017, we did the same thing, right? We dropped here, all the way down here. Before we saw the relief rally, we came down here. We dropped 70%. And then we saw the relief rally towards the 50-week SMA. So far, let's see how far we dropped here right now. Let's just take a measurement tool here. There you can see it. So far, we dropped 35%. So on average, if we say last time we dropped around 50% and before that 70%, so the average is right around 60%. So based on that data, we could still go a bit lower here, somewhere all the way down actually here to the 200 moving average and the 61.8 on the Fibonacci retracement for the entire bull market before we see a relief rally back up to the 50-week SMA. So there you can see that's also, of course, way less probable that we see such a massive relief rally after we lost all that massive support here. And the last time around, we did something very similar. We had a very similar setup here. We came down to the 100-week SMA and bounced from there. So we are in a similar spot right now here. 100-week SMA, of course, the dump or the drop from the top was way smaller than last time. But of course, it also was 20% less than in 2017 last time around. And now we're right around 20% less than it was in 21. So from those perspectives, for me, it's still the most likely scenario that we for now bottomed out, and it's now likely that we're going up to at least $101,000 to $102,000. My probable targets are in the $104,000 to $106,000 range, and that's where it then gets really interesting. If we can start reclaiming the 50-week SMA from there on, then of course, very, very likely that we're continuing here to test the 8-year resistance once again. But the momentum is to the downside. The probability is that we're going to see that we have seen the cycle top and that we're going down to a bear market lows. As investors, we have to go into each cycle and exit each cycle with a plan and stick to that plan. And the same thing as traders, right? We can long towards, we have a very nice setup here. If you could potentially already be long here towards that area between $101,000 and $106,000, but then you need to have a plan also. Are you going to exit? At what point will you exit there? Will you take profits there? Or will you scale up once we reclaim the 50-week SMA? Now's the time to plan all this, and I will show you exactly what I'm doing and how I'm approaching this in my upcoming streams. I actually will break down, I promised you guys I will show you the video on how I approach the market for my long-term investments going from the last cycle into this cycle, and how I plan to re-enter the market for my long-term positions to prepare myself and set myself up with the lowest possible average purchase price of Bitcoin for the next bull market as well. So guys, if you want to see all this stuff and you enjoyed the analysis, then do me a huge favor right now and smash up that like button. I always say it seems like a stupid, silly little thing that probably gets overseen, but trust me, guys, YouTube is pretty picky. YouTube needs to know that you guys enjoy the content. And of course, my mission here is to grow the channel. And as you might have noticed as well, it's not to push any Bybit links or to make money on that end. I have other ways of making money, and I'm doing this to give back to the community, and of course to build a platform for future businesses and so on. But I don't approach this like most crypto YouTubers, where I'm just here to really tell you that I'm entering a trade now. You guys should do the same. Use my link and wreck yourselves. I could be doing that, but I'm not. I'm just talking about the price action. I'm telling you what I see in the charts, and hopefully you learn something from this, because of course none of this is financial advice, purely for education and hopefully some entertainment purposes as well. So guys, do me a favor, all that good stuff down there. And if you want to see more of it, and if you want to see those videos where I talk about my my long-term strategies as well, then join us here if you haven't done so already. Activate that notification bell as well, so you hear always when my streams are going live. Usually I share it as well over on X. I let you guys know exactly right before I'm going live and when I'm going live. And also you can watch all the streams over on X as well. Right, guys, talking about the X stream should be over 5 minutes ago. And yeah, I'm coming to the end of my video as well. Not much more to cover. I'll really get into the price action for the weekly close, and I'll break down the daily close. The daily and the weekly close combined on Sunday, and we look exactly at the data as well, of course, for the next week. As you know, guys, if you haven't done this yet, let me just go over there quickly. We have the data sheet coming out every Sunday. The Unhyped data sheet, completely free. All you got to do is hit the link. It's in the chat right now and in the description and all across my social media. And what I do is every Sunday I publish my data sheet here, where I cover the global, the macro data to watch, global and US domestic data, the on-chain data to watch, the fear and greed index, the leverage in the market, institutional stuff such as ETF flows, and on-chain data such as SOPR, and then of course the current month's historic performance, and my key levels for Bitcoin on the monthly, weekly, and daily chart. And that's updated every Sunday. And once you sign up to it, you get it to your inbox every Sunday once it's live. Right, guys, and that brings me to the end of the stream. I hope you enjoyed it, and if you want to see more of it, like I said, join us here, hit the subscribe button, all that good stuff. Follow me across social media. You have all my links down in the description. No Bybit links, like I said, no Feemit links, no go wreck yourself links down there. Only good stuff, so you can stay in touch. And yeah, guys, I'm out of here, and as always, happy trading, and see you soon.